Hi there, welcome to a Kneppy Invest, and welcome to my mother's birthday, February 13, 2025. I found it really easy to remember my mother's birthday because it's the day before Valentine's Day. And I deplore Valentine's Day, but you know what I don't deplore? My mother. So happy birthday to my mother. She's somewhere in South America. She had been spending a bit of time in Argentina on a boat, seeing glaciers, or icebergs, not glaciers, icebergs. But that was a few days ago, and she could be anywhere in South America right now. I don't think she's back yet, but she could be in Chile, Peru, Ecuador, Colombia, Venezuela. Probably not Venezuela. Maybe spending some time on the beaches of Rio. Doubt it. Argentina again. Who knows? Suriname. Anywhere. I don't think they're coming back just yet because I did mention the possibility of me visiting them in February. And they said no because we're going overseas. And I'm just wondering, do they hear that I'm thinking of coming down in February and then they organise a trip overseas? I'm wondering if that actually happened. I doubt it. I doubt it. Anyway, happy birthday to my mother, and hopefully she's having a great time. Although it's still yesterday in South America, or maybe not. Maybe not. Maybe it is today in South America. Okay, so let's have a look at the ASX today, and this video will go accordingly. Like every other video I've ever done in this series, we'll have a look at the ASX today, best and worst performing sectors, indices, and also companies. And then we'll have a look at, I do want to bring back the top 5 stocks of the day because it's more orderly. Yesterday I was all over the place, and having a top 5 just narrows my view, and it just makes it more, I think the video a little bit more efficient. So I do actually have a top 5 stocks of the day. A lot to talk about. So I did have to make a choice. I've already called the stock of the day, which was actually fairly easy choice. Temple & Webster, share price of that company up about 12%. So pretty good report. And that is the stock of the day. And quite a few other interesting reactions from the market. A few I got completely wrong, including Alliance Aviation. I thought that was pretty good. Share price down a fair bit. Domain, really good, I thought. Share price up. IAG, share price down. Close to being stock of the day, but not there. Treasury Wine's report looks really good until they got to their outlook. And I wouldn't be surprised if the share price of that company's down. And I have to talk about Medicus. So those are some of the companies I'll be talking about when it comes to top 5 stocks. I'll also briefly mention some of the other companies, very briefly, and mostly focusing on the chart just to see if the market has reacted positively or negatively, looking for breakouts. And I might briefly mention Telix and also Telix. Both companies have X in the ticker code. And then we'll have a look at some of your comments, which I haven't looked at recently. So quite a few of these I haven't seen. Anyway, so let's have a look at the ASX today. Interesting, because CPI was a little bit higher than expected in America. I thought that might tank the market. It didn't. It looks like the market doesn't care, or maybe the market expected it, even though it was higher than expected. I think the market was thinking, yeah, it's higher than expected, but we expected it was going to be higher than expected, if that makes sense. Anyway, so our market is up today, even though Wall Street was a little bit down. Tech was down a lot, was down way more than that. So it has rallied during the day, and resources has had a good day. I think that was led by gold. Of course, gold. So let's have a look. Yeah, tech's rallied really nicely. Found a bit of a low at about 11.30. I'm pretty sure it was down like 0.7%, something like that, and has found a nice, has rallied nicely. And funny enough, XAO and XJO actually have drifted lower since about 11.30. So maybe there's some relationship there. Now on to the best and worst performing sectors. Materials, great. Utilities, not so great. In fact, only 3 sectors up. Materials, discretionary, and IT up a little bit. And energy, staples, utilities down a fair bit. Interesting. Really interesting. Banks up today. In fact, if you have a look at sectors, compare that indices. Most indices are up. Most sectors are down. That's interesting as well. Yeah, resources a really good day. Gold's a really good day. ASX 20 up 0.48%, probably led by banks, maybe iron ore. Let's have a look. I'm going to say banks and iron ore. I could be wrong with iron ore. Although iron ore is starting to look a little bit more bullish. And I have actually seen some articles on that. And just those articles could cause a little bit more bullishness in iron ore. So let's have a look at the top 20 companies on the ASX. 13 up, 7 down. And if we go by market, no, we'll do it by percentage change. And the best performing companies, we have BHP, iron ore, one of the biggest companies. And then we also have Rio Tinto, Fortescue. So it looks like iron ore's had a really good day. And banks a little bit lower on the list, but they've had a good day as well. Commonwealth Bank up another 0.12%. So it's becoming a significant bubble. That's what I call it. I think CBA is becoming a significant bubble. And when it pops, I think we can see the ASX have a significant pullback, because I think if it pops, then a lot of the other big companies will pull back with it. So who knows? The market can remain irrational for a long period of time. I'm seeing an increasing amount of articles on CBA and how irrational the market is being. So that's interesting. And not only investment-related articles, I saw a non-investment article, I think it was like news.com or something like that, who also mentioned that CBA is at ridiculous levels. So it's getting out there. So eventually, it's got to pop. And I do think CBA is in a bubble right now. Anyway, so worst performing companies in the ASX 20, Pro Medicus, interesting reaction from the market, really bullish on open. And then within the first 2 hours, it fell away. And it's actually recovered a little bit. QB Insurance down, I think, 2.1% because of IAG. And Woodside, CSL down to 255. It's getting to an interesting level. I might add to my position of CSL if it falls below 250. Okay, so let's have a look at the bests and worsts of the companies today. Top gainers. I actually did go through this fairly quickly. And in the top gainers by percentage change, not much to talk about. I was just trying to see if I've missed anything, and there wasn't much. We're seeing fairly low turnover for the best performing companies, including Bridge, SAS, so a SAS company, market cap of 5.8 million, Empower, Mont Royal Resources, Reach Resources, and Future Metals, all up on fairly low turnover, and all those companies have a market cap below 10 million, although Reach Resources has a market cap of 10.06 million. SPC Global, won't talk about that company, up and down like a mad yo-yo machine villain. And if you just have a look at the chart for this one, SPG, was it? SPC Global. It's just insanity in volatility with this one. But generally going down, and today up for who knows what. Who knows why? Maybe just because it's been oversold. And that's about it. Although Telix, I just noticed Telix there, up 16%. They did release something that was interesting enough for me to have a look. And I suppose I can talk about Telix right now. I was going to talk about it later in the video, but Telix had suspended one of their programs with, was it MinRes or Fortescue? I forget which one. And they've restarted that. So Telix announces midstream project restart because they did get funding from the WA government. See if my memory is still intact as I get older, maybe. Oh, it's Pilbara. Oh, I was close. You know, there's no difference between Mineral Resources, Fortescue, and Pilbara. Anyway, so with Pilbara, an award of a $15 million grant from the West Australia government. So they're restarting this project. I have no idea what this project is, but it was enough to get the market excited. And to be honest with you, it was enough to me have a very quick read of this. But it's not the sort of announcement that would get me interested in buying Telix shares. And the other reason why I'm not interested in buying Telix shares is because the chart looks absolutely deplorable. And we'll see if it's changed with today's action. And the answer to that is no. I have no interest in Telix at this point in time. Share price has been in a long downtrend. In fact, it's been a downtrend since start of 2023. Well, maybe even longer than that. I would say towards the end of 2022, when the share price was $6.50. So share price has dropped 90% in this downward trend. And this is another story stock. This is what can happen to story stocks when the sentiment shifts negative. Okay, so that's Telix. At least share price is up 20% today. And that's about it. Let's have a look at top gainers by market cap. Sigma Healthcare. Oh, didn't the merger go through or something? Something happened with the merger today. Merger with Chemist Warehouse, implementation of scheme. That was yesterday afternoon. So maybe it's just some positiveness around that. I don't know. But Sigma and Chemist Warehouse, looks like that merger is 100% going through. And I don't know if they're going to change the name. They should change the name to Chemist Warehouse. They should. Mineral Resources, no price-sensitive announcement today from MinRes. I wasn't going to talk about it. I did see share price was up, so I had a look at if they did release any announcements, and they did a non-price-sensitive announcement in regards to governance update. I didn't even open this up. Maybe something to do with that. Who knows? Maybe something to do with Chris Ellison. So let's have a look at the chart for MinRes. Is it time to get excited? Just based off the chart? Maybe valuation? And no. It does look like it's trying to form a bit of a base, just above $30. I do know a lot of people did get really interested in MinRes when it got to $30 back in September, and it rallied really nicely off that, but it's fallen all the way back down. So no interest in trading MinRes just yet, but I think when it turns, the uptrend could be quite phenomenal. But I think it's going to be related to lithium, iron ore's turning. So maybe MinRes was up because iron ore was up as well. Maybe that's the reason why. Simple as that. Webster, stock of the day to main holdings. I didn't want to talk about this one. The results, the numbers look really good. I was like, oh, that's surprising. And share price is up 9.2. Synlait milk. Go Synlait milk. I should do a chart of the day on Synlait milk. A beautiful chart. Beautiful turnaround. It reminds me of Webster many, many years ago. Up another 8%. In fact, my position in Synlait milk is now up 50%. That was actually a good move on my part. Give myself credit. And nothing else to talk about here. There's Telix. Nothing else to talk about. So let's turn our attention to the top losers. And just like top gainers, nothing much to talk about except for IAG, down 12.8%. Share price just keeps on dropping. I was going to do a chart of the day for Insurance Australia Group, but I thought I'll just do that in this video. And the reason behind that is because this is a potential trend killer. I'm going to say that. This is a potential trend killer for IAG. I didn't have a look at their results, but I did read that their gross or their forecast for gross written premiums was a little bit disappointing. And that's maybe why the share price is down. Bioxon has dropped, rose a lot yesterday, dropped a little bit today. I don't care about that sort of thing. It's a little bit of noise to me. And I'm hoping it's on low turnover. That'll be fairly good, low turnover. Turnover 9. Oh, it seems like not as much as yesterday. Yesterday was a really big turnover. Today, its turnover's dropped. And you're going to see a bit of profit taking when the share price of a company rallies 30% on no news. But still, the chart still looks okay. Okay, let's go back to top losers by market cap. So IAG, Treasury wines. I thought their results looked pretty good, and then we got to the outlook, and it wasn't a downgrade, but it was a downgrade. It was a basic. It wasn't a downgrade, technically downgrade, but it was a downgrade. What else? Oh, GrainCorp released results. Aurora. Quite a few of these companies released results. In fact, AGL didn't. They released their results. Was it yesterday? Origin released their results today, but these 5 companies, 4 of them did. And Alliance Aviation released results. Surprised by the market. And nothing else much here in regards to results. Okay, so let's turn our attention to the top 5 stocks of the day. Before then, Telix, got to mention Telix, pharmaceuticals, all share price down. They did receive Illucix approval in the UK. The share price was up on this news and then has come back a little bit. So Telix Pharmaceuticals keeps on hitting goals, that sort of thing, and the chart still looks pretty good. This is one of my favorite positions right now. You're not supposed to have favorites. You've got to leave your emotions out when it comes to trading, but definitely this is a great chart for Telix Pharmaceuticals. Share price reached a high of nearly $30 a week and a bit ago. Has pulled back a little bit. Don't care about these pullbacks. You always see pullbacks. You go through this whole chart and there's pullback after pullback. So not concerned about this pullback for Telix Pharmaceuticals. Before we talk about Calix, so what I'll do now is I'll quickly go through some of the companies who did release results but did not make it in the top 5 stocks. So we'll start off with Alliance Aviation. For some reason, I erased it. I'm not sure why. They released their results last night. Oh, what am I doing? I thought these results were actually quite good. They did beat expectations. Share price down 8.77%. I don't necessarily know why. I thought these results were pretty good. If you have a look at their media release, we saw growth. There's a table here somewhere. There it is. So these metrics, numbers are really good. So revenue income up 11%, EBITDA up 26%, profit before tax up 10%, aircraft in service up 6%. It sounded really good. I didn't know any of the expectations, and their outlook was fine as well. I found the outlook was fine and nothing significant in that. So I thought the numbers were good. I thought it was a good result, and I thought the share price would open up. So I can be wrong. We'll try to find out what or why the share price is down. Yeah, I haven't found it yet. But anyway, now I'm pretty sure I did read somewhere that maybe some of the numbers did beat expectations, but the chart looks ugly. So it doesn't really matter. What I'm doing when I go through the results, I always look for the market reaction. I'd say 75% of times I do know what the market. I'm fairly accurate when it comes to knowing the market reaction. And what I'm looking for is potential breakouts. And I knew Aviation didn't have a potential breakout because their chart was looking fairly weak. I probably needed to see the share price get above this downward sloping line, which has been in play for a long time. In fact, if you have a look at the weekly chart, it's been in play since the share price reached its high back in 2021. So it's a brilliant downtrend line and needs to break above that. And at this point in time, there's no sign of that happening just yet. So even though I was a little bit surprised by the market reaction, I was completely wrong. It doesn't really matter in this case because the chart is actually quite bearish. And maybe that's the reason why the share price is down. Maybe it's as simple as that. Anyway, so that's probably a little bit more time I wanted to spend on the results, Aviation. So I'll go through these fairly quickly. So what I'm looking for is just any sign of a breakout. And if I do see a sign of breakout, I might spend a little bit more time on that particular company. Let's start with Aurora. Aurora. And straight away, that's the weekly chart. Now, the weekly chart does not look good. Daily chart does not look good. I have no interest in Aurora. And the other thing is share price is actually down 6.4%. So we can move on to Origin Energy. This chart did look good. Something happened not that long ago. So something happened on the 31st of January. Share price pulled back 6.7%. And I have no interest in this particular chart either. Share price has not really recovered from that really big down day. You could even say that particular day was a trend killer. And it looks like it. So fairly similar then to IAG. Northern Star expected massive increase in profit just because of increase in gold. Share price up a little bit. And this is a brilliant looking chart. So you cannot go wrong with most gold companies right now. Well, you could go wrong in the future. Who knows? Gold prices could drop 50% in the next week. We just don't know. But at this point in time, charts of gold companies look pretty good. Downer, EDI, are they still called that? Yep. Share price down a little bit. Fairly, I'd say I was neutral with this chart if I had a look at it. No reason to be holding it or trading at this point in time. Just going sideways. They had a nice little breakout back in September. And that must have been, 30th of August. That must have been the result. But that breakout didn't really do anything. And then when the share price dropped on the 12th of December, that was sort of another trend killer. Looked like the trend was turning up, but this looks like a trend killer for Downer. And since then, no reason to be in. Green Corp. This one, no interest. Look at the share price has dropped like a rock over the past 4 months. Has dropped from 920 to 697. Interesting. I've got this this support level right there. And look where the share price reached today. The share price low today was right on that support level. That support level probably goes back a few years. Yep, goes back to 2023. Looks like it goes back further than that. This is the weekly chart. So it doesn't go back that long. I thought maybe it went back further than that. But that's a nice little support level at about $6 and, 60 cents? Let's have a look. $6.70. Anyway, so share price has bounced off that today, but otherwise, chart looks bad. And what else do we have? Company called HDN. I think this is a REIT. Homeco Daily Deeds REIT. And no interest, so we can move on. And South 32. When you look at these results, numbers up big, but just because numbers are big doesn't mean the share price is going to rally. Although South 32 share price is up 4%. But I look at this chart and I go, no interest. Look at the volatility. This is a daily chart, just all over the place the last year. Yeah, it's been trading between $2.80 and $4 over the past year. So no interest in South 32 right now. Although I have had a successful trade with South32 many years ago. I think it was 2020. Yep, there is me buying. I should put when I sell. I should put in where I sold it. A little bit early for that breakout, but eventually did break out about 3 or 4 months after I bought. But so I do have fond memories of that trade for South32. But just because I have fond memories doesn't mean I'm going to make a trade because of memories. Worst thing you can do. I heard something interesting today. I was listening to a podcast, and it was a trading podcast, and I was just mentioning trade or rage trading. I was like, why would you just trade because you're angry and that sort of thing? Apparently, people do that. And they do it when they've made some big losses in a day. So this was more of a day traders podcast, and yeah, people are inclined to just trade when they're angry because they've made a few mistakes, and I can imagine that just amplifies their mistakes. Anyway, never bring your emotions when it comes to making decisions. Leave your emotions out. Okay, that's all I think of. That's all the companies that have released results that are not in the top 5 stocks today. Okay, let's start off with Pro Medicus. Pro Medicus share price down 2.9%. I'm not gonna argue with that. Their results were, what can you say? Do I wish the numbers were up a little bit more than this? Sure, but I think there should be no surprises here. Revenue up 31.1%, underlying profit up 42.9%, net profit up 42.7%, underlying EBIT margins to 72%, up from 66%, debt-free, franked interim dividend of 25 cents per share. So the only problem with Pro Medicus is the valuation. So maybe some investors out there expect a little bit more growth than this, and I can definitely understand why they would be thinking that. Now, just based off a lot of contract wins this company has experienced over the last few months. In fact, they had 4 big contract wins within a month period, or just over a month. There's without doubt that these numbers are going to significantly increase over the next few years. So, interesting reaction from the market. We sometimes see this with companies that are really overvalued. It doesn't matter about the results. It's just some people just can't handle it, and they will sell. And I did see a tweet from Claude Walker, and he does have a position in Pro Medicus, and he said 2 times a year he gets really nervous when it comes to results, and it's because of Pro Medicus. And I think that's anyway. Won't say what I think about that. Fair bit of volatility just today. Have a look at the 1-minute chart. You'll just see the volatility in Pro Medicus just today. A really interesting reaction, a really positive reaction in the first 20 minutes or so. Share price almost got to $300, and then selling came in. A lot of selling came in. Share price went from almost $300 all the way back down to $272. So we're talking about almost 10% drop in share price. So fair bit of selling. It could be just someone was just digesting results and came away from it a little bit negative. It could have been a fund manager just dumping shares on market. We did see some big volume coming in near the bottom. Looks like another nice little double bottom there. We did see it get a little bit lower a few hours ago, but we have seen share price rally since then. So a little bit of buying has come in the last few hours of trading. So overall, nothing to be worried about or concerned about with Pro Medicus just yet. If you are concerned about the valuation, just do what I do. Just have a look at the chart, and if you see such share price starting to pull back, significantly pull back, I would maybe think about taking some profits. At this point in time, I'm not at that point. I do think the share price would get above 300. We did see a share price pull back a fair bit in August last year. I'm not sure if that was on their results. I do remember that. I also remember, February of last year, share price pulled back heaps. This was on their results. I remember this. Share price decreased 13% on their results last year, and the share price actually finished that day at $94. Share price now $280. So sometimes the market will overreact. It did last year, and today's reaction has not been as severe as last year. Okay, so that's Pro Medicus. Coming in number 5. 4, we have Treasury Wines. Treasury Wine Estates down 5.83%. Chart looks pretty ugly. I was interested in these results because I won't say who, but I do know someone is really bullish on this company for the long term because of China. That's it, China. Chinese middle class are going to buy more wine, And for some reason, they think Treasury wine estates will benefit from that. There's a possibility they will, but maybe they won't. Just don't know. It's a really weird, in my opinion, it's a really weird reason to hold a company for the long term. Just because you think someone's going to buy or buy more wine in the future, you're speculating. In a way, you're speculating. And the funny thing is, this particular investor would say they don't speculate, but I think they're more speculative. This sort of reasoning for buying shares in the company is more speculative than looking at the chart and just buying based off the chart. Anyway, if Treasury wine spun out Penfolds, I would be interested in that. I'll put it that way. Anyway, I open up these results. I don't follow this company at all, have no idea about expectations. And my first thought were, when I saw these numbers and the percentage increase, I was thinking, geez, these are pretty good. Net sales revenue up 20.5%, earnings or EBITs, they do something a little bit different, up 35.6%, EBITs margin up 2.8 basis points, no, BPTS, net profit after tax up 33.9%, earnings per share up 22.5%. So it looked really good. Return on capital employed, 11.2%. I thought, oh, this looks pretty good. I think the share price will go up. And then we got to, by the way, they went through the different divisions, segments, whatever. So Penfolds, Treasury Americas, and Treasury Premium Brands. Treasury Premium brands not doing so well, but Penfolds doing really well, up 24.2%, and Treasury Americas doing fairly well as well. But looks like it's just Penfolds and Treasury Americas. The premium brands not doing so well. Anyway, so I thought, oh, this is going to be pretty good reaction from the market. And then future perspectives. So a lot of times companies will put just a trading update. For some reason, Treasury Minds have titled this section as future perspectives. Anyway, in financial year 25, or they just have F25. So is that Formula 25? So instead of Formula 1, this is Formula 25. Treasury Wine expects EBITs of approximately 780 million, which is at the lower end of the previously guided range of 780 to 810. So technically, it's not a downgrade, but it is a downgrade. Because what analysis would do, because they have a range, they'll put that range into their machine, into their algorithm or whatever, into their model, we'll call it a model, and it'll spit out all these valuations for Treasury Wine. Now they can say, well, 780. So their valuations now are going to be lower for Treasury Wine. So this is a downgrade. So a lot of times, so if Treasury Wine said their EBITs is now expected to be 810 million, that would be an upgrade. So whenever they do change the expected number, even if there is a range, and the number is actually in that range, it all depends when that number comes in within that range. So this, not technically a downgrade, but it is a downgrade. And that's why the share price is down. They do or are blaming Treasury Premium Brands because they have reduced expectations for that division. Okay, so let's have a look at the chart for Treasury Wines. And this chart does not look good. Well, it doesn't look bad. It doesn't look good. I have no interest in this at all. It's trendless, sort of like friendless. Well, sort of. This has no trading friends. There's no trader in this at all. No reason, no short-term traders, no medium-term traders, no long-term traders in this at all. The only people holding Treasury Wine are those who believe Chinese will buy more Treasury Wines. And maybe that's right, but there's just no reason to take a position in this company right now because the chart looks horrendous. Now, in saying that, let's go and look at the weekly chart. I was going to say, if the share price gets to about $10, that could be a nice buy because share price has remained above $10 over the last 3 years. It only fell below $10 during 2020 and 2021. So $10 could be an interesting level for Treasury Wines, and that could be sort of a low. So that could be maybe a reason to trade this and expecting a bounce. Our share price has been as high as $14.50 in the last 3 years, but chart looks pretty bad. There's no reason, to be honest with you, to be in this right now. It is, so if you just put a line there, so that's at 10.50 in fact, and that's where the share price is right now. And over the last 3 years, whenever share price gets to this level, it did fall briefly below this level at the start of last year, maybe that's a time to buy. It looks like the share price rallied last February on their results. Let's go back. Oh, there was a really nice rally in February last year. Share price went from $10 up to $13 in a pretty quick period of time. That's a 30% increase in shares in a fairly short period of time. So you can see some short-term trends in here, but nothing for me. So that's Treasury Wines coming in at number 4, Domain. Domain. Hello, Domain. I am a shareholder of REA Group, and I've always thought of Domain as a really ugly stepsister to REA Group. I've never ever thought about Domain as a serious contender for being in my high quality portfolio. I don't think it will be a contender ever. I just think it's well below where REA Group, and even real estate agents know that. They will tell you you'd need to put your property on REA Group or realestate.com, but Domain, you don't really need to put it on Domain. And that is a problem. By the way, market is flat. That's a definition of flat. Let's just reload this. Oh, look at that. It's gone from red to green, even though it's still flat. So they appointed a new interim CEO, Greg Ellis. Don't know anything about him. So I opened up the first announcement, which was the media release. And these numbers did strike a bit of a, ooh, these are pretty good. So revenue up 7.4%. Yeah, probably would like that to be a little bit higher. But they had found a little bit of scale, operating leverage or something, because even though revenue is up 7.4%, EBITDA up 13.8%, EBIT up 24.7%, and profit up 28.3%. And when you see profit, EBITDA up way more than revenue, it means margin expansion. Margins have improved in the past year. I wonder if they talked about that. I didn't go through any of the commentary. I just really like the numbers. And I did put down whether these numbers were better than expected. I think they were going to be better than expected, but I wasn't sure. So revenue was a little bit of a miss, a slight miss. EBITDA was a 4.1% beat, and this is based off or compared to consensus. Normalized profit, 14.1% beat. Interim dividend, a 27.5% miss, so that was a little bit lower than expected. And yeah, so generally the profit was higher than expected. I think that's probably why the share price is up. Yeah, that's probably it. Yeah, I think it was a pretty good result for Domain. No complaints. I didn't have a look for any sort of guidance there. Here we go. Any sort of outlook. Probably the only outlook they've got here is financial year 25 costs are expected to increase in the high single-digit percentage range. Previously high single to low double-digit. So that's a little bit lower than the previous expectation. So that could be another reason why the share price has increased, because costs are a little bit lower than expected. There you go. And expects stable EBITDA margins in financial year 25. Anyway, so let's have a look at the chart for Domain. I have not looked at this chart for a long time. Since it hasn't been popping up on any of my radars or on my screeners, I don't think this is going to be a brilliant chart, but I could be wrong. Let's have a look at DHG or Domain. And that's probably why share price has been a downtrend. Is this a breakout? Close. The last time share price was this high was in November. So we are at a 3-month high. I probably would prefer a 6-month high, and I probably would prefer share price getting above 330. The reason behind that hopefully is quite clear. We have a really strong resistance level. We can see the share price trying to get above 330 3 times in 2024 and just failed. So that is a fairly important level for this. And if it gets above that, we're talking about almost a 1-year high. Anyway, so this is not really a breakout. We haven't seen a lot of buying coming in today either. Volume has been nice, but we don't see a green candlestick. So a nice results, but I'm not seeing anything in the chart to get me excited. So that's Domain coming in at number 3. A bit of a surprise here. Insurance Australia Group, share price down 12.56%. I did not have a look at these results. And then I saw the share price down. And one of the reasons is because I expected some really good numbers for IAG, because Suncorp released their results, was it yesterday? And pretty good numbers. And when I say pretty good numbers, I mean profit was up a fair bit. So IAG had an increase in profit of 91.2%. Insurance profit up 55.9%. Gross written premiums only up 6%. Net earned premiums up 9.7%. And interim dividend up 20%. So I thought, oh yeah, that's numbers are pretty good. And this is after I saw the share price down. So I went through this after I saw the share price down, and I was like, why is the share price down? The only explanation I have seen or written was from an analysis. Where is it? I've got to find it now. Here we go. So this is from Visible Alpha Consensus. So their net profit was better than expected. In fact, the expectations were that profit would be about 700 million, and profit came in at 778 million. But gross written premiums up 6%, but that was behind analysis estimates. So maybe that's why the share price is down, because of gross written premiums, and maybe that's really important for insurance companies. I don't know. Anything else here? No, that's it. I was trying to find a quote from analysis. I've only got some quotes from the managing director, Nick Hawkins. Anyway, that's why the share price is down, I think, because of gross written premiums, a little bit lower than expected. Everything else seems pretty good. And maybe the guidance as well disappointed. So, yeah. GWP growth towards lower end of mid to high single digit. Maybe that's why. Anyway, so I've received no clarity on why the share price is down 12%. It seems like an extreme reaction for the market. Now, let's have a look at the chart. And I'm calling this a trend killer. Trend killer for IAG. Beautiful trend. Gorgeous trend. I've mentioned before, if you have a company in your portfolio that is trending higher, like IAG, there's greater chances the company will release something positive than negative. But it's not always the case. I just want to emphasize that every single time I say that. It's not always the case, but a lot of times it is the case. And here's a case where it hasn't happened. Company shut in a beautiful uptrend, and it looks like their results did beat or did disappoint the market, and the share price has dropped today a fair bit, 13% or so, and it's actually a pretty negative one-day counterset. So this could be a trend killer. And if I was trading this right now, this would be my get out of this trade day. That's why I call it a trend killer. This could be destructive to the trend. And I think that's the end of the uptrend for IAG. Coming in at number 2. Coming in number 1, we have Templar Webster. I've already done the video on this one. Share price up 12%, 13.59%. We're in the closing auction right now. A pretty good day, pretty good results. Nothing to complain about. Chart looks pretty spectacular as well. Wait out for my standalone video on this company. Chart looks really good. For full disclosure purposes, I'm trading this. In fact, I bought it $12 on the back of their results in August. Share price on that day rose 25%, or 23.26%. And there will be experts out there who say, you're too late. If the share price rises 23.2%, you've missed it. You've missed it. Well, I'm up 33% on this position right now. Have I missed it? That's over a 6-month period. Have I missed it? No. You be the judge of that. Have I missed it? No. I did have to remain patient with this one because the share price didn't really start moving into an uptrend. Technically, it was always in an uptrend, but didn't really get moving up until December. So we're talking about 2 months ago. So the first 4 months, not really doing much. And I was thinking, should I get out of this trade? But eventually I just went, no, remain patient. If it remains above that orange line, just stay in it, and you just don't know. So it remained above that orange line, and I stayed in this trade, and I'm thankful right now I've done. So even though share price can rally by 23%, doesn't necessarily mean you've missed the boat. And those experts who are telling you missed the boat, you're getting in too late, they're probably holding positions, many of the positions who are probably flat or down over that 6-month period. Anyway, so don't listen to those people who say that. And I know quite a few experts do say that. I know because I've heard them say it. Anyway, so that's the stock of the day. Treasury, no, not Treasury. It's got almost the same ticker code, TWE and TPW. There you go. The only difference is the P and an E, and that's physical education, which is very important for all of us to remain healthy and active and keep your brain active as well. Okay, let's have a look at some of your comments. CJ Smythe, 777, SM1, Synlait milk is off. Farmers are withdrawing cessation notices. I'm a share milker, own a dairy cow herd in New Zealand, talk to a few farmers around, and the extra 20 cents to stay supplying is very attractive. If supplies can be retained, this could be a major recovery story. I'd love to hear things like that. Anyway, so Synlait milk, I was going to do a Synlait video on their chart, just say chart of the day, because the chart looks spectacular and that is pretty good. And maybe I'll do it now. Maybe you've given me the motivation to have Synlait milk as the chart of the day. I haven't done one of those for a while. That's the sort of thing I love to hear about. Airbnb Wollongong. I wonder if this person has a Airbnb in Wollongong. Do you think so? It's the only casino in Sydney. How can they lose? Is it? I thought there was 2 casinos in Sydney. I thought there was like Crown Resorts as well. I have no idea. I don't know anything about casinos. I do know there's a new one in Brisbane. There's one in the Gold Coast. I thought there was 2 in Sydney. I could be wrong. I don't know. I know they have a lot in Las Vegas. That's about it. I've been to Las Vegas 3 times, not gambled once. Las Vegas is a really intriguing, interesting city, and I really like the buffets. Buffets are Anyway, that's another thing. Map0v0 says, what is happening with AVR? Is that Anteris? Something like that? AVR, Anteris Technologies, share price 13.4 cents. Is this the old Medicus and Allied Health? Let me have a look. If this is that old company, I want nothing to do with it. I want nothing to do with this company if it's that company. It might be. Usually Market Index has that here. I'm just going to go back in time. Way back even further. I'd be able to tell you, yeah, I think it was the old Medicus, because I see the cardio cell, and that was Medicus. Here it is, Medicus. I don't like this company at all. Yes, I do have a problem with this company. They've changed the name 3 times in the past 13 years. I think they've changed their business model, and they just sucker in investors all the time. If you have a look at the chart, Anteris Technologies, I still can't believe the share price or the valuation is still $400 million, which is extreme. Share price has just run up the last few days. I don't know why. But if you have a look at the weekly chart, you just see the share price going on massive spurts here and there. The last one, so back in 2013-14, share price, and I'm pretty sure they've done a share consolidation, share price went from like $13 up to $180. It wasn't that. I'm pretty sure the share price was like 10 cents. I still remember the share price 10 cents. Share price went bonkers, absolutely bonkers, and the company was burning cash like there was nothing else. They did have revenue, receipts, but they were burning so much cash, it was never going to work. And eventually the sentiment just turned so negative and nasty towards the company and the management. And then they did something. They changed their model. Maybe they bought something, and the share price went on a really good run back in 2022. I had a look. The market cap was like $800 million. I was like, why? This company has nothing. It's story stock. And they're just changing. I would assume it's different management, but it's still the same company. That's me being biased. I am being so biased when it comes to this company. But this is another reason why, by the way, I'd never owned shares in this. I just follow this company because I just didn't understand why people were so excited about it. They don't issue any Appendix 4Cs. I'm pretty sure this company has no receipts or revenue, very little receipts or revenue. And by the way, they have released nothing. So share price has gone bonkers on nothing. Share price up 35.7% on absolutely nothing. They should receive a price query from the ASX. I have no interest in this. No interest in AVR. I have no idea. And again, I'm being biased. I'm being really biased against this company because of what happened many, many years ago. And the fact they changed the name 3 times, I just don't like that. I just think that's, anyway. XTX was up solely because of CPU. There you go. That sort of makes sense. Your Frenchman says, I'm nearly at 6,666,000 subscribers. Let's have a look. 6,645. Got 21 to go before I'm at 66666. I'm pretty sure it's just 6. Look at this. According to this, Nick Patterson, let's see if that has come in. Probably has. There we go. I was going to say I didn't see this comment, but it was 49 minutes ago. Thoughts on PNR chart? Lots of volume and a possible breakout. Is that Pantoro? If it's Pantoro, it's just gold prices are lifting all boats sort of scenario, and probably true of this one. Yeah, it's true of this one. Pantoro's, look at that volume coming in. Look at beautiful, massive volume coming in the last few days. Yeah, it's just gold. As I said before, you can't go wrong with any gold companies at this point in time. I do have a few gold companies, and they're doing fairly well. I have no reason to get out just yet. I just wish I hadn't owned a few more gold companies. I think the only one, I still remember Bellevue Gold. They did release some really negative stuff, and yeah, the chart does look good. So there are a few gold companies who don't look good at this point in time, and you got to wonder what's happening. You got to wonder how the shareholders are thinking with Bellevue Gold, because Bellevue gold prices are going through the roof, but Bellevue Gold share price doing nothing. You got to be pissed off. Sort of like Peninsula Energy. Peninsula Energy is the uranium company, and if you have a look at the chart for the last few years, when uranium prices were going through the roof, Peninsula Energy share price just kept on falling. I've got to feel sorry. You have to feel sorry for shareholders in this company and Bellevue Gold as well. I am going to just wrap it up there for today at 45 minutes or so. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.